Friday, October 31st, end of October. We have seen the October lows. This is Stan Ehrlich market analysis. Well, Wednesday, I talked about some bearish engulfing ER sell signals that appeared to me to be the likely bearish beginning of a move down to around the highs of October and maybe more. It kind of depends upon the next several days. So far, so good. Even though we closed a little bit higher today, in some cases, that does not change the situation from either yesterday's bearish engulfing ER on the Dow or the last couple of days, like the MES, 2 days in a row. We need to close above or even get above yesterday's highs in order to negate the signal. I totally expect a move down to 68.14, which is very small. But really, the downside likelihood, I think, is in the ballpark of 65.76. Lows of October 10th and a variety of highs in that ballpark August, September. And so here's the 1 minute chart, 5 minute, that is. As you can see, it's starting to break down a little bit if you don't interpret it differently. That's what I look at. New lows for a few days, new low closes, no new highs, unless that involves a bearish engulfing, which I like. Next chart closed a little bit more of a gap on the spider from a few days ago. Been talking about that every day since it happened. And then closed a little bit higher. Doesn't really change much. Still looking for a little bit lower, like the other indexes. Spider 5 minute chart starting to slip. Support in the ballpark of 673, which would also close the gap. All the way down a lot lower, which is definitely a possibility, and that's 654. And then we got a different story if it gets below that. Next, QQQ. Couple gaps to still close. Closed a little higher. Not particularly impressed. Still looking for a move down to close a small gap at 61, 618, 60. Then probably down to another gap closure at 611 and a half. But that begins support. My best downside objective at this point in the next few weeks, if not a couple of months, is 583 and a half. And here's the 1 minute chart, minute chart on the NASDAQ. Sorry, yeah, QQQ, correct. Okay, so the NASDAQ futures contract had a brand new bearish engulfing yesterday. And so far, the top of the market for the NQ. Higher close today doesn't really change anything. In fact, that's a good short sale around the middle of yesterday's range for ER3, which I don't talk about that often. Next, 5 minute chart of the NASDAQ. Of course, I'd like to see it close below yesterday's low ASAP and more. Next, YM topped out with a bearish engulfing on Wednesday, went down a little bit yesterday and popped back slightly today. And that's at the 1 o'clock California close, traditional, which if this is a futures contract is a different number. And it's still open for a couple of minutes, down 0.15 at the moment. All right, anyway, no change of opinion. I still think we have seen a major turning point in the stock market indexes this week. And the YM 5 minute chart starting to make lower lows, close the gap, bounce back pretty good, but pretty good still as a very, very short-term trading opportunity. The longer term is a different time frame perspective, of course, and we're starting to see lower highs and lower lows. Next, Russell already have done this for several days. This is the fourth day down since the high day, which is a double top potential. Okay, I'll put the line in here between the two highs, which are almost the same, very close, and picking the lowest low on that date right there. I will draw a line starting right there. This is the depth of the formation about right there. And then grab that stick and drop it right at the low of the lowest low between the two highs. Oh, nice. Minimum downside objective is down to the bottom of this big support area. Interesting. Next. Russell. Yep, that's just the 5-minute chart. Starting to break down and did so several days ago. No signals, unfortunately, just resistance. Now we're into bonds, and I've got a longer term chart showing. As you can see, since May, a couple of bullish, not quite the lowest low, unfortunately, are buy signals. We've seen higher highs and back up to a significant resistance area in overbought conditions about a week or so ago. And now today, a lower low again. So my downside objective is 115, a little under 116. And I don't think that's going to do any damage to the longer term bullish expectations, which I really have been talking about since I think June. Yeah, probably May or June. So, how low can she go momentarily? And I've just given you my best idea about a little bit of 116. So, in the notes, it's a similar, not particularly bearish expectation. And my first comment would be 112 plus a few ticks, the bull trend line, which correlates pretty closely to some other highs and lows that are pretty good resistance and support levels. I should actually draw this further to the right, and I haven't done that. That's about right there. Okay, so we're in, and if we stay there, off of a trend line both. So a little bit lower than maybe higher, probably higher. Crude, stuck in a rock on a hard spot. Bottomed out the support I've been talking about this week. Almost came up to the top of the trading range of support and resistance. I don't know. I'm waiting. Next, natural gas. No change of opinion. I'm still bearish to 2.2, I believe it is, 2.26. And now it's kind of going sideways for a while, obviously a couple of months. But I still expect lower lows. Resistance has stopped a couple of rallies already. No reason to believe it wouldn't do it again. Next, heating oil got above, stayed above, closed above, and tested a previous bear trend line after being a little bit overbought. We resolved that problem and then started to come back. I'm friendly. I'm looking for higher levels on heating oil. I'm not quite sure how much we can see, but I'm bullish. We have a bearish engulfing on the top of the gold market almost. The high day was actually the next day by just several ticks. Nevertheless, the signal per se by the rules didn't work. I'm still bearish. Overbought conditions topped it out. Not oversold yet. Frankly, looking for a low at 35.98-ish. Silver, we did get the exact high day on a bearish engulfing ERSL signal. Came down, made some lows a couple of days ago, came back, back to where it was a few days earlier. I'm still looking for it to roll over and make new lows, and probably down to 40, basically, and maybe even a bit lower than that, which would be 37. Next, platinum, higher high than the last week or so, but a lousy close. It's the lowest close in the last week or so. Interesting, but not breaking below previous lows. So this is almost a bearish engulfing, not quite. It's not close to overbought, so no signal. but I did get one a couple of weeks ago, and it hasn't been higher than the high of that signal so far. Looking for lower levels, probably down into the ballpark of 1353 area. Copper, double topped out, overbought conditions, dropped off, tested support again today, just bounced off of it like yesterday. Going to pull that to the right a little bit, and no change of opinion. Still looking for this double top to pan out. Need to close below that low right there. And then your downside objective is testing the whole lows of the trend. New high close on soybeans. We know about the news and the deal with beans and all that. Well deserved as well. This is almost a major, huge, long-term breakout. That trading range that we may be making new highs above is at hand, very close. And that needs to be a close above 1120-ish. And we're at 1115. But unfortunately, we were very, very overbought at 90, which is extremely overbought. As a matter of fact, is the last time it was that overbought, wow, I've got to go back. Oh my God. Oh, wow, multiple years. Well, at least back to June of 23, if not back even further to February of 22, which is the beginning of the top of the whole damn market. Okay, we're topping out at the moment. Pull back to probably 1090, maybe 1082. Then I hope it holds in support and makes new highs after that. But this is quite profound on a long-term basis with soybeans in particular. Here we go with soybean oil. Testing support at the moment. Maybe it could drop off a little bit more. I don't think that's going to change the trend, which has been persisting for over a year now, which is higher lows and higher highs. This is a pretty good support area it's dipped into. I expect it to bottom out somewhere above 47 and a quarter. Unfortunately, soybean meal is very much the opposite at the moment. It's 97 on the RSI, and it hasn't been that level in a couple of years. Plus the fact that it's reaching into a major area of resistance, a lot of bottoms since summer of 23. So this is a major resistance area, and I do expect a pullback probably to 309-ish, but the long-term trend may have changed to the upside. Corn gave me a bearish signal yesterday. Just because it closed a little bit higher doesn't mean it violated any rules. I just don't want it to get above yesterday's high. That's my final risk. My threshold of pain, I like to call it. I will not stay short if it gets up there. Otherwise, I continue to watch very closely to lower my protective buy stop, what we call STS, smart trailing stop, very, very closely, basically minute by minute, etc. Wheat. Bearish engulfing yesterday, and again, another move back up close to yesterday's high. It does concern me, but I'm not out necessarily. Depends upon the way it moved in the meantime, like yesterday's close after I'm short, or this morning. Next, I'm bearish momentarily, not long term, but short term in wheat. Apple, new historic highs on the opening, exhaustion upside gap on the opening, in my opinion, closed lower. Overbought conditions are pretty significant. You have to go back to September for one shot, and it has a history here of topping out in this ballpark RSI at today's highs, which is what my custom RSI measures. Not the close to close like Wells Wilder, my old friend who taught me RSI, had calculated back when he started RSI 68, I believe, I modified it. I like what I see. I'm turning neutral to bearish on Apple because of the way it acted today. Next chart is a little rally in Tesla, but we still have the top of the market, October 2nd, sorry, with a bearish engulfing ER sell signal. And the rally this week did not break the rules, although honestly, it has already gotten down quite a ways lower than the bottom of my worst case scenario fill on the bearish engulfing day. So there's plenty of opportunity to lock in a profit. Nevertheless, the longer term rule still applies. It's okay. I'm a little disappointed it didn't go down a lot further quicker. Like close that gap at least. I'm still looking for that and that gap also. Looking for a move down to 369 at least. NVIDIA. Upside exhaustion gap 2 days ago. Yesterday closed the gap on the downside. Came back but couldn't hold it and turned around and closed a little bit lower today. Looking for a gap closure, a small one back a week or so ago around 187 and a quarter. The real support doesn't start until a little bit lower, 184.40. And there's a definite possibility of coming down to 164. Next is AMD. Gap to close at 235.70. Still in effect. Overbought, turned around. So far hasn't impressed me. Looking for that gap closer at 235.70. You guys have a great weekend and profitable trading to you.